Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Knightscope and giving my thoughts on their recent short announcement about their path to profitability. So I'm going to be going through that today. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Knightscope, so this video should be for your entertainment purposes only. Because I could be wrong about everything I say in this video, you need to do your own research before making any investment decisions. So, Knightscope came out with this press release earlier this week, and they basically said, "Hey, we are working to achieve profitability within 24 months," which is something they mentioned about a month ago, I think, and now they are giving slightly more details. We're going to go over that here. I mean, just as a general statement, my initial opinion here after reading this is there really wasn't that many details, right? They said, "Hey, we now have much higher revenue than we did the year past. We intend to continue growing." And there's a couple things out of here that they said they're going to do. Number one, they said they're going to basically cut staff. It should be somewhere in here where they're streamlining their operations and right sizing its combined workforce, a reduction of approximately 20%. Okay, so that's one thing. We'll talk about that in a moment. They also talk about improving their margins through better and faster assembly times, which they talked about this, multiple instances with the 5th generation K5, right? The K5 tends to be their most popular unit, at least as far as we've seen so far. And that the 5th generation is supposed to be able to be assembled in like 20% of the time of the prior version because of a complete redesign. Improved service operations, restructuring facilities footprint, and new approaches to reducing its telecommunications costs. So this, I think, is a big deal working with their margins. One other thing that they called out in here is working through the backlog, right? Additionally, the company is progressing well in delivering on its multi-million-dollar backlog of new orders as many supply chain issues have subsided. So this is really good. So let's go into slight detail on this in a minute. If you look at their prior quarterly filing, you see that they announced their backlog was, I want to say, $2.5 million for the actual autonomous security robots, and that is a huge number for them, right? That's, I think, almost a 50%. If they delivered that overnight, that would be an almost immediate 50% increase in revenue. And so that's a really big backlog. If they're now publicly saying, many of their supply chain issues have subsided and they can work through the backlog quickly, I think that's going to be a huge benefit for the company, because that is recurring revenue they're going to have. Now, with the one asterisk there, and that is, as we've seen in the prior filings, revenue is not turning into profit, and their gross margins have actually been negative. And I know it's Jay asks, isn't reduction in workforce a bad news? So maybe let's talk about that in just a second. So the on the margins front, real quick, and I will get back to that one. On the margins front, right? This is what I'm concerned about, honestly, the most, is them getting to positive gross margins here, as we have seen in the past. These have sort of wavered a bit, and they've gone up they've made some slight improvements, but there's really been no clear trend. And this is something that is make or break for the company at this point, right? They need to start having positive margins, especially as a revenue is ramping up. We really need to see that. And these are still pretty vague. Like faster assembly times, that makes sense. I don't know. They are not very transparent in breaking down their costs. So actually, am not sure how much, what the net impact is of a faster assembly time. Improved service operations and facilities footprints. Again, it's really hard to say. I know they do break out some of their costs for their leases on facilities, but it's really hard to say, especially after the Case acquisition, how much those numbers are going to be. And they talk about reducing their telecommunication costs. Again, it's really hard to know, how big of an impact that's going to be. Now, Jay, to your question, Jay asked, isn't reduction in workforce, a bad news? And I don't necessarily think this is bad news after, an acquisition, right? There was a fully functioning company over here that was Case, a fully functioning company that was Knightscope, and when they acquired them, the whole company, there's bound to be some duplication. And just overall, I think you got to look at their expenses, and their expenses have been growing, you know, quite a lot. So I mean, on one hand, it's yes, it's bad news that they have to get rid of people. On the other hand, I think you can, maybe there was some duplication in some of the folks. Maybe, maybe they overhired a little bit for certain things in the past. It's really hard to say, right? There's not enough. There's not a whole lot of detail here, and that's a general criticism that I have of this. They call it out as a path to profitability, but there's, in my opinion, just not enough detail here to really, really evaluate it. And I put together sort of my own projection of what things could look like at a very high level. It would be nice. It would be nice to see something like this from the company. It'd be nice for the company to split it out and say, to say maybe to have an estimate of when they think they're going to get to that backlog. And maybe that would be too much of a forward-looking statement for that. Too much detail to potentially get in trouble with the SEC. But I think some of this, right, having historical breakdowns of these costs, so that we, as the investors, are in trying to understand the unit economics of the company, can have in a more clear idea of what the impact of a significantly faster assembly time is, right? They said they think that they can reduce this by about 80%, but I don't know if that's, 1% of the cost of the robot, or 10% of the cost of the robot, or more, right? I really have no concept of how significant this is. The same with their telecommunications costs. What are they doing to improve their service operations? This is pretty vague, and that's a, I wasn't particularly thrilled if this is what they are intending to give out. And they say there's, look in the 8K for more details. This is the 8K. There's not a whole lot more in here. They do talk about how much, basically, how much in expenses they expect to incur as they are, laying people off, right? Severance payments, etc. And they talk about, well, we think we're going to have $613,000 in both cash and non-cash charges. Although then they later on say they expect that approximately $168,500 will be cash expenses in 2023. So the way that I'm reading this is that of this roughly 600,000, most of it is actually not going to be in cash. Most of it is probably going to be in stock, in the share-based compensation. So that's kind of interesting that they're doing that. I wonder if some of this isn't that folks had some stock options or restricted stock units, and as part of the severance, they're just letting all those units vest for them. I don't know. It's hard to say. It's at least good that this is not all going to be cash out of their pocket, because I think as of right now they really can use all that cash. But at the same time, it's also not that great to think that they're going to be handing out a bunch of stock to folks who are going to need cash, because they're immediately going to turn around and sell that if they if they need to pay rent or whatever else. So that wasn't that's a mixed bag. But I mean, again, getting back to your question, I think this might be good, it might be bad. There's just not really enough detail here to know who they're getting rid of, right? If they said they're getting rid of all their engineering team, it's like, okay, yeah, that's real bad. If they're getting rid of maybe their bottom 20% of their salespeople, maybe there's some duplication in, bookkeeping, administrative stuff. It's not clear that would have a major impact on the company. So I don't know. All right, couple other things. I also looked at, and I'm not going to pull them all up here, but I was trying to make I'm shifting here and trying to make some projections for the future. And I put together a rough model here. I'll walk through it very, very briefly. I base this all off of some numbers of roughly how many robots are deployed, what's the average revenue per robot, and then what margins do they get on those. And then I separately modeled out the revenue and gross profit from the case emergency systems. I sort of took a rough stab at what numbers could look like based off of last quarter and going forward, and held these flat for G&A, R&D, and sales. I held these flat for the next couple of years, right? This would be the, from an investor's standpoint, probably the most optimistic perspective that you could have, which is that their expenses for G&A, R&D, and sales would remain flat for a couple of years while the company really tries to grow to profitability. So this, I'm stating right off the bat, this is going to be a fairly optimistic take because I'm trying to put together a projection that actually accomplishes them, that actually shows them getting to profitability in roughly that 2-year time frame, because there are enough details here to have a whole lot of visibility, and I had to put in pretty optimistic assumptions. So I guess this would be one of my criticisms, is it's not really clear how they're going to do this. They didn't give enough details there, and I think you have to be pretty optimistic. Think they're going to get break even on a net income basis in 2 years, just from what we've seen, right? I mean, I'm hoping that the company does better. I think, again, the market, and the market is there, the product is there. But to date, I don't think that they've really gained this momentum. We'll see. So what I look for, or what I did here, was I assume that their next 2 quarters, Q1 and Q2, are going to be great quarters. I think they are going to grow massively as they work through that backlog. I also looked at their most recent sales announcements since November, right? The past 2 months, because this gives us some indication of sort of their current pace of sales so that we can project that forward into the future. And when I looked at it, they had a number of announcements, a couple of the headlines I did have recorded here, things like, 4 new contracts for 8 machines to kick off the new year at Knightscope. Knightscope earns 4 new contracts for 7 machines, those sorts of things. I mean, and then not the least of which out of the past 2 months was when they announced their largest contract in the company's history. I guess I could probably pull that one up. That was pretty, I don't know that I talked about it on my channel, but I imagine anybody who follows the company certainly noticed that. And that was huge, right? This was, this was for 12 K5s, which is a huge order for them, right? It wasn't even, 2 years ago, I think their total amount of deployed machines was like 51 machines. And so 12 K5s in a single order, is a lot. Even now, I think that's roughly a 10% increase in their deployed K5. So that was a huge order to see. And I think that, again, this was part of my thesis I talked about almost a year ago, that we are going to start seeing larger and larger orders of these as companies, make these robots. They pilot it, and then they say, okay, these things work. Let's have it at all of our facilities, or let's roll it out on multiple properties, and that you're going to see that come around. You're going to see that those, you have larger orders, which are going to get them improve their volume, improve their margins on the production and service side, and it's also more efficient on the sales side, right? Because they're getting larger contracts for for the same amount of work. And so this is something that we really hope we see more in the future, and I'm assuming that in my projection. So getting on the projections, I assume they grow. I kind of took a stab in the dark, not in the dark, an informed guess in terms of how many robots they would have deployed, on average in Q4, and then carry that forward for the next sort of 2 years, or almost 3 years actually, because I went in the first year of profitability if the trends continued. And you can see the numbers here, where I guess I can go down to the graph, where I assume right now they're at about 120, and that is going to grow over the next year at the end of Q4 to about 300. And again, a lot of that is going to be getting through. They have 120 right now, but they have, I think it was 49 K5 or 49 robots in the backlog as of November. They've sold even more since then. I don't know if I said the number. I combed through these sales agreements, and I only looked at K5s, and it came out to about 24 sales of K5s that were announced in the past 2 months. That's, in 2 months, you multiply by 6, that would be, what's that, 100 and almost 120 K5s per year. So that's like a doubling roughly. That's 100% growth rate that they're at right now. Not to mention the fact that they have that backlog as of this point in time to burn through, which is even at a higher pace than that. So all that put together, I think they're going to see, I think it's plausible to see quite a lot of growth, that by, between, again, end of Q4 of, basically end of 2022 and the Q4 average of 120 robots deployed, and then a year later to be, 2.5 times that, roughly about 300 robots deployed. And then from end of 2023 there to the end of 2024, for them to grow sort of another 60%, to say that by the end of 2024, it's plausible they could have, roughly 500 robots deployed. And I know that, again, that might sound pretty optimistic. There's a lot of scenarios in which they don't grow that fast, but I think it's reasonable that they could do that. Not the least of which is to remember, between here and there, they're pretty far down this process, we hope, of getting authorization from the federal government to get FedRAMP certification. And then if they can start making sales there, I think some of those, you could see some very large orders, for the federal government. So that's plausible paths, and I think this could continue, all the way through to 2025. Here I put these projections where, this is just, again, sort of an optimistic scenario. I'll admit that, but maybe by the end of 2025, we could see an average of, 775 robots deployed. And if you turn that, look at what revenue numbers would be there, this would get you, and again, this is just for the security robots portion of the company. And I'm counting, roughly like K5s here, or assuming they're mostly K5s when I translate it into revenue. An average of 51,000 per robot. I think that's what we've historically seen when they've reported their numbers recently in their backlog, or that's the one place where they do report a number of robots and an actual dollar figure in terms of recurring revenue side by side. So if we look at this, we would see, revenue are the blue bars that would go up to, at the end of, in 2023 Q4, right at the end of this year, roughly, $3.8 million. And again, that's a big jump from where they have been, but I think going through that backlog, making sales, it's plausible. And then jump forward another year, we could looking at $6.5 million revenue from security robots, by the end of 2024. And their profit margins, right? This is another one where I'm taking a huge stab in the dark on this one, because we have no history to go through, right? We know that they are actively trying to improve their margins. We know that on paper, you look at the napkin math for the unit economics and the robots, and we know that as long as the customers are renewing for year 2, year 3, year 4, over time, that the profit margins on those second, third, fourth, fifth years actually are, in theory, very high. In practice, we haven't really seen this play out, and I'm not sure if that's because they've had higher turnover at customers, or if they've had higher service costs on these robots at the with the current design, maybe even some of these older generations of the robots that are still kicking around. It's really hard to say. What I did for the profit margins was I kind of just did this as a percentage of revenue, and I said, hey, let's assume even for Q4 and Q1 that they're still negative. Q2, they basically break even. They have a neutral, they have no gross profit, but not a gross loss. And then that it inches up and finally tops out, at the end of 2025 at, I want to say I put it as 37% in gross margins, if we could see that. So this would be, I'm looking at this row 8 right here. I could probably just select it so you can see. I kind of figure throughout 2023, they end 2023 at 15% gross margins in Q4, and 2024 at 30% gross margins, and then that goes up throughout 2025 to about 37% gross margins. Okay, I also looked at the revenue from Case for their units here, and I'm treating these separately for now because we've got a lot of history on the security robot side. We don't have nearly as much history on the Case side. We have the 2021 full year numbers and then the half year for 2022, which is just not that much to go off of. So if you look at this, what I did was I just looked at their rough growth in revenue that they had in those 2 data points that we have, and I assumed they were going to get exactly that same rate of revenue growth every quarter for the next 3 years. No geometric growth here, just the same. I think it's $250,000 quarter after quarter after quarter. So this is basically just a straight line up. And I assume the profit margins or gross profit margins stayed the same at roughly 70% of revenue this whole time. So that is my assumption on the Case side. Add those together, and these blue bars show you what the total gross profit for the company would look like. Where that really goes up and up and up. As you can see, the revenue or the gross profit, honestly, from the security robots goes up. And again, if we're looking at this sort of 2-year mark in 2024 Q4, oh, why did that jump on me? I'm sorry. 2024 Q4, you'll be looking at $5.1 million in gross profit. Their net income would still be negative on that particular quarter, but then in Q1, they would basically flip to be roughly neutral here, roughly sort of zero net income. It's actually, slightly negative here, but it's effectively zero. And then they would have the remainder of 2025 again with this projection, actually with sort of a positive net income, or let's say a positive free cash flow. Again, there's some other things that can go into net income that are non-cash items there. Now the downside here, or the thing to consider, is this is a pretty optimistic projection. Again, because I stated this up front, but I'll remind you, I'm assuming that their costs for G&A, R&D, and sales basically stay flat for this whole time. I'm not sure that that's really realistic, but for this model, let's just take it as an assumption. If you don't think that's realistic, then you probably pushes out profitability even further, unless you think that I'm for some reason underestimating the revenue growth or their profit margins that we could see, which is possible, right? The company could execute and all the things could go well, and they could do even better than what these projections are. Nothing prevents them from doing that. But if I look at all of this, the bad thing is, you see that their net income is negative for basically the next 2 years, right? That's what it means to not be profitable for the next few years. It means they're burning cash, right? And so if we go down here and we look at their net income, you can see quarter after quarter, they would just be drawing on this cash. It'd be smaller and smaller every quarter, but they're still going to need, that money's going to need to come from somewhere. Probably it's going to be a stock dilution, right? They did actually hint at being able to issue some debt, right? That was one of their more recent filings where they were hinting at taking on some more debt. I think, if I recall, it was like up to $10 million more of debt, or maybe up to $20 million. I can't recall exactly off the top of my head. It's in the filing. But if we assume they didn't do any debt, and we assume that they get the rest of it through stock dilution, it sort of matters what's their average price here. And I computed this I put it as a parameter here in my spreadsheet, but I looked at this. What if their average dilution was at a share price of $1.25? And I know that's, probably not a price that anybody who's currently invested in the company wants to hear, but if they are diluting in general, that tends to push stock prices down. If there's not a strong rally in the overall market, it's hard to say that the stock price is really going to shoot up for any other reason. And if they sort of have this growth, it's still going to be, we're still gonna have to see multiple quarters of significant growth, I think, for folks to start to really get optimistic about the company, and for the stock to sort of float a little bit higher. So if we and so maybe this is something that you could say is either optimistic or conservative or pessimistic. But if you just look at $1.25 per share for their dilution on average, this is roughly, how many shares, the blue bars here show how many shares they'd be adding every quarter to make up for that sort of difference in net income, where they're actually, burning cash quarter after quarter, all the way through to the end of 2024. And then these red bars show, the cumulative amount of shares that would be added between here and there. And so in the end, they would end up adding just a tad over 20 million shares, to the what do you call it, the number of shares outstanding for the company. And so that's something that we might expect to see, if they do actually execute a plan that looks like this. So hopefully that gives you a picture of, what this could look like. I think the upside here is, I think these are very plausible. We have seen it demonstrated that they've got this huge backlog. I have to imagine when the backlog is, basically down to zero, and they're able to deliver robots quicker, and we have a growing number of existing clients that are ready to expand after they've seen the product working at one facility or one property, and are now ready to expand. That could be, this growth could actually happen. And I think when you start to see the growth happen, this is going to compound on itself, where people are going to, again, I think the growth in the amount of robots is going to then help the margins. I think helping the margins and the growth in the revenue is going to be, two factors people are going to start to take, notice of. Let's say after Q1 or Q2 or even Q3 numbers show up and people see, hey, this company's growing, their margins are improving. There's a future, again, a year or two out where they are actually profitable. And then you start to look at it. What does it look like when they're profitable? Again, if they continue on this trajectory of this rough, 10% quarter over quarter growth throughout even 2025, you get to a point where at the Q4 of 2025, they could be making $1.6 million of net income, and growing pretty rapidly, and seeing how they've got this recurring revenue model for all their existing customers. And, you can, at this point, you can see there might be major potential, and the company might have, could have a very high multiple depending on, how much of this growth is being realized and how much folks realize the market is, still much larger than what the company would be at that point. So anyways, that was a bit longer than I intended to be, but that is my rough projection on, what this could look like for the company actually getting to profitability in the next 2 years. The one thing that I hope is that the company comes out with more details to, confirm or deny some of this, and so that to just give us a better picture of actually what they expect, what they are going to do, and what they expect to happen as a result of that. So, all right, that is it for today. Thank you very much for watching, and